Waiting to go live. We are almost live, and bam, there it is, my friends. We are live once again. Everybody stream on in. We have an amazing show today, my friends. Today, we're exploring a powerful new addition to Avalanche's DeFi stack, and we're talking about Unity, UTY by XSY. Designed as a synthetic delta neutral dollar, Unity keeps your capital active without leaving the ecosystem. We'll unpack how that works, why it matters, what it signals for the next wave of capital efficient on-chain finance. I'm your host, Breevy, and joining me today let me get Austin up here as well. Joining me today, we have some absolute stars in the building here. We have David Markley, COO and co-founder of XE. Say what's up, my friend.
Hey, Breevy. Thanks for having us. Much appreciated. I'm excited for this talk.
Hey, I'm excited to get everything going as well, my friend. I'm also joined here by WSF, aka Sean, CEO and co-founder of XE. Say what's up, my friend.
Thank you so much. It's really great to be here.
No problem. For everyone out there, you got to love the energy that Sean's coming with, my friends. And next up, and finally, and not least, but last and not least, we have my friend here. We have Austin Campbell, head of strategy and risk for XE. Say what's up, my friend. And also joining by another person as well. But say what's up, Austin.
I was going to say, I will bring the exact opposite of the energy of Sean, which is to say like grouchy fixed income person energy. So
it's okay. Yin and yang, we need a balance. And last and certainly not least, we have our friend over here. We have Matthew Schmenk, business development over at Avalanche. Say what's up, my friend.
Hey, how's it going? Sorry I'm a second late. I'm traveling this weekend. I'm actually visiting my girlfriend's family, but it's good to see everyone here. Austin, I know we haven't spoken in a couple months, but nice to see you again. And Sean and David, it's always great to be hanging out with you too.
Hey, we're happy to have you, Matt. Thank you so much for popping on. I'm not going to tease the folks too much today. I'm gonna get straight into the meat of this thing. Sean, David, for XE. How did this emerge? What was the landscape in crypto like before XE, and like why did you folks decide to start building this thing?
So I'll just say quickly, I think that David and I know Austin as well, we've been around the space for quite some time. And, going back to at least 2015, 16, 17 timeframe. And I think it gives enough perspective to both identify emerging trends and also have real experience with things that didn't work. And the reason I started there is that I think all of us have a deep belief that the DeFi space is going to be the space for innovation around new types of assets, that there'll be new types of structured derivatives, that there'll be new types of products. And I think the real growth will come from that rather than simply porting over existing traditional financial products and assets. So in the midst of all of this, we thought that there's a great benefit to finding a way to promote a little bit more of a predictable and stable exchange of value and store of value by leveraging layer one native cryptocurrencies in certain blockchain ecosystems. Because before this, it was a lot of, hold asset, hope it appreciates, and hope I make some money from that. We're trying to put instruments into DeFi that people can actually both understand and use and take advantage of a number of the things that DeFi brings to bear in terms of speed and access and all of those good things and security. So for us, it was really lasering in on stable assets and assets that are sort of asset reference token space, and really dig in on that and try to establish a presence there. And Avalanche gave us a great platform to do that. I'll pause and let my smarter colleagues jump in and add on anything they want to add at this point.
I'll do a quick statement, and then Austin, feel free to pile on. But if you just, there's a lot of talk about how the user experience in DeFi is still a work in progress, and to take that a step further or potentially refine it, putting capital to work in DeFi is very much a work in progress. Like, it is difficult. And so what is the thing that we at XE have identified is that there is a strong demand for more capital to be put to work. And so by enabling people to seamlessly put their capital in these markets and extract value from doing so, that's the core value proposition at a 30,000 foot level. So we simplify the ability to take advantage of these products that, quite frankly, I sat down with a buddy of mine over the weekend and we did every single button click. And so it simplifies, 50 plus button clicks to get you to, where you want to be. Austin, I'll let you pile in here.
Yeah, I think so. One, I agree with everything that was said. And I think the other thing we've been, call it observing, thinking about, sort of leading us to this moment with XE, is aligning some of the original promises of DeFi and crypto in the first place, right? Which is, if we think from a perspective of users should be participants in the ecosystem, users should have a stake in what's going on, users should share in the benefits of growing something, right? Because if not, just go use a bank. And none of us are here to use more banks. The answer is you've got to build stuff that actually delivers value to the end user in the long run, right? Like, it is easy in the current environment to launch meme coins or something, and people enjoy those, and that's fine. But if you look at things that will stand the test of time 5, 10, 20, 30 years down the road, it needs to have core economic value that it delivers to users. So can we build a product that has, call it, core economic activity inside of it, and then share those returns with people in some form, right? There are many ways to solve that problem, I think is very valuable. The other thing is building in a first-class way, right? Like, what we don't need in crypto is more things just immediately collapsing or turning out that there's no there or having been poorly engineered. And that's one area where I'm just going to speak as somebody who knows a lot of the ecosystems. I think Avalanche has outperformed over time in terms of, like, building stuff that actually works. And I think it's something we're excited about doing at XE, is, like, giving a genuine effort here. And now, this is the grouchy fixed income person in me that has to say, none of that is a guarantee. Everybody tries to do things the best way, but even the best financial institutions in the world occasionally collapse. See 2008. But the goal is being an honest operator, trying to do things the right way and trying to build things that will stand the test of time.
Austin, I think it's interesting because you keep kind of touching on your roots of fixed income. I'm someone personally that has a thesis that we're going to see more of fixed income replaced over time, especially on, like, the long end of the curve, just because of, I think we're all kind of in agreement of the collapse of kind of the debt or fiat systems eventually. And with that, I think people are going to turn to instruments like XE to achieve higher yields and kind of replace that, like, longer duration side of the curve. Like, when you can't hold TLT or other instruments without price risk, like, you got to find diversified yield sources. And I mean, obviously you can go to, like, the short end of the curve more so, but with that, if the Fed eventually lowers rates, that yield goes down. And so that's why I'm personally so bullish on teams like XE that can kind of be supplementary to a fixed income portfolio.
Yeah, an interesting thread on that too is, one of the running gags on the street is that everybody always talks about, like, stocks with high volatility or, very, call it, whippy and speculative positions. But if you look at the businesses that make the most money year after year after year in traditional financial markets and, like, sort of roll that snowball over time, it's almost always funding related, right? Like, capital, funding, allocation. Like, if you want to understand the success of something like Berkshire Hathaway, it's really in getting the plumbing right for capital allocation and funding more than any one individual thing that they bought into having, like, some 1000x return. Those are great if you can get them. Like, props to the people who do, but the problem is identifying those before the fact as opposed to after the fact is actually very difficult. And so, one of the things I think, knock on wood, that I'm hopeful for with crypto is, as the space matures, people will understand when you look at things like the spectrum of traders on pump.fund, the supermajority of people lose money, right? It's a small minority that are making the majority of the money. And if you're going to build sustainable things, you instead need to build the kinds of stuff that are bread and butter products where the majority of people using it will make money over time. And so, Matt, to your point, like, I'm hopeful that part of this shift from, extremely speculative, like call it pyramid style returns to something more sustainable can happen.
Do we feel like now are we starting to see this shift? Or do you feel like as of now, people are still kind of more in this kind of speculatory kind of wave?
Matt, why don't you start from the Avalanche side, and then we can talk about from the capital allocators we engage with.
Yeah, so Revi, unfortunately, I think this cycle has been pretty binary in nature between like retail and then like institutional capital. Retail is still in the mindset, kind of what Austin said. Oh, I'm going to go on pump.fund. Pump.fund is the casino. I'm gonna, put $100 in and hope for a 1000x and get rich quick. I think unfortunately that kind of is derived from the bad habits of last cycle, where we need to build longer term sustainable products that don't leave people with, a tainted feeling in their mouth in terms of like, oh, I just lost all my money again. Crypto's a scam, yada, yada, yada. And with that, and that's why I said it's so binary, because there is a new participant in the space. Like institutions are very much here this cycle compared to last. And although they're just dipping their toes in, I think, in terms of their allocations, they're actually taking blockchain much more seriously this cycle compared to last. Last was like purely speculatory bets. I mean, MicroStrategy was like the first company doing the Bitcoin strategy, and then Tesla, kind of meme built a Bitcoin position on their treasury or balance sheet. And so in regards to like this cycle, unfortunately, I do feel like it's still kind of binary in nature, but it's really good to see like real money, longer term money come into the space. And I think retail probably needs to take their own funds more seriously in some regards, in terms of, yes, I can gamble with 5% of my portfolio rather than 95% of my portfolio. Because then, like, when retail gets burned again, at least they only lost their 5%, and they might have already earned that back on, products like XE in terms of their staked Unity earns what, like roughly 10 to 15% annualized at this point in time. And so I think it's just a mind shift, like mind state shift in terms of the current market participants. But yeah.
I think you hit on something really important there with position sizing and allocation, because my answer to all of this stuff is often yes and, right? And what I mean by that is if people want to gamble, they are allowed to. If people want to do highly speculative trading, they are allowed to. If people want to invest in super boring stuff, they are allowed to. And the goal is, one, having a complete spectrum of financial options for people, because if your space is only degenerate gambling, the odds of you going mainstream are actually very, very low. But on the other hand, if your space is only ever the most boring of the boring, like all we ever serve is unflavored tofu, you are also unlikely to go mainstream, right? Like variety and diversification matters. And it's really about position sizing, providing options, being mature about it. Because like you said, if people want to gamble with 5 to 10% of their money, guys, have fun. But like if you're somebody like me, look, I have gray hair. You can see this on the call. I have a house. I have 2 kids. I have expenses. I should not be taking the money for their school and like YOLOing it into meme coins, right? And so it becomes a allocation problem for a lot of people. And there's room for everything from the very boring to the incredibly speculative. And the key is having a robust ecosystem. So my answer to that stuff is yes and.
I'll add two cents here just on the shift. So I don't know if we went through the full backgrounds, but Sean and I had the pleasure of sitting at Algorand, building an L1, and a lot of the institutional conversations we were having back then was, what is blockchain? What is crypto? how exactly does this work? And fast forward to us launching XE, and those questions have shifted from, what is blockchain to, okay, which counterparties are you facing? How does your custody solution work? How do you think about insurance, et cetera, right? And so one of the really hopeful, or I guess progressive things that we've witnessed over the last 6 years is that shift from what is happening to, okay, how do you accurately price and allocate? And that's been a huge step function. And I think it really underscores why now for XE, in the last few weeks, we've got over 30 million of TVL in deposits, the vast majority of which are from institutions, people that are doing these due diligence questionnaires, that are going through the full counterparty risk assessment. And that's a huge step in terms of the maturity of this space. And to Austin's point, if you want to earn, 10, 15% and then roll all of that into meme coins on the side, you're more than welcome to, but treasuries can now also play in the space. And that's just a big step function.
David, I really, really appreciate you for pointing that out, kind of that shift in perspective, because originally you're just having to explain to these institutions what blockchain actually is. And then now it's more of a shift to how do we actually use this thing? We're talking about security. It's like an actual conversation as opposed to, I'm assuming, I've never been in these meetings before, but I'm assuming these meetings prior to were probably more like pitch meetings, if anything. Like, I'm trying to sell you on why you should start using blockchain as opposed to you already kind of being interested in blockchain, and now you're just trying to figure out, okay, well, how do I utilize this thing, and how do I set up security, et cetera, et cetera. Sean, I saw you unmute. Did you have something to add?
My only more, I'm the philosopher here. My perspective on this is that fundamentally what we're talking about is the ability for people in the space to build accretive trust for people who want to participate in the space. So David mentioned the user experience. It's terrible. The industry's failed. The industry has failed from a user experience perspective. And the reason I say that is the degree to which a process or a technology is visible to the user is the degree to which it has failed the user. And if you're going through 15, 20 steps, we're reducing that complexity with XE, but the whole industry needs to shift. Otherwise, what ends up happening is, because there's a loss of confidence in the process and the system, then the trust starts to go towards the individuals. And the nice thing about XE is that we're helping the former, but we also have a team that people believe, based on experience and performance and reputation, that you can trust this team to make the right decisions. Over time, the team will be important, but less primary, I think, when the system itself becomes more predictable, more simple, easier to understand. And as evidence, if you look at the Janover, or the DeFi Development Corp now is what it's called, if you look at that, the people who are putting money and buying sort of equities in that company are about 10 years older than the people who are buying crypto directly. And what does that say? That says that there's an appetite, but there's a concern that these individuals have to actually go through a multitude of steps and risk their money. Otherwise, I could just buy, a ticker. I can just buy a stock, and then they're going to handle it for me, and I don't got to worry about it. And we're trying to close that gap. And I think understandable, predictable, and credible products are a very nice first step to build on what David and Austin have already said. And that's why I think we're so excited about this opportunity in general, and with AVAX specifically.
Actually, I think you set it up perfectly for us to start doing this deep dive into Unity. To everyone out there, I spoke with the team earlier and let them know I'm coming from the perspective of someone who isn't truly well versed in this field of kind of synthetic dollars and like stables of this nature. So very, very excited to kind of like get like a high level overview of what you folks are building, how it's impactful, and then start diving into kind of like the nitty gritty, kind of like what makes this thing tick kind of behind the scenes. But I guess just to start things off, David or Sean, if you guys just give us a high level overview of Unity, and then we'll start deep diving into this thing.
All right. Yeah, I can start, Sean. So What is Unity? Unity is a dollar referenced asset, meaning that it tries to trade at a dollar peg. And then the primary question is, okay, well, what supports that value? And the construction under the hood is long spot assets. So in this case, AVAX. We are working on staking said AVAX. More to come with Matt and team shortly. But long spot AVAX plus a perpetual short. And a perpetual short is just a contract that trades at the inverse value of the spot asset. And so as the spot appreciates in price, your short loses and vice versa, right? So that price action is offsetting. And so that's how we're able to maintain the dollar reference or that, kind of dollar pricing of Unity itself. There's a second component here where if you put that dollar to work in the yield vault that we call YUTY or yield Unity, you're entitled to protocol shares that we distribute as marketing incentives. And so think about the same way that when you hold dollars at Coinbase, they pass on rate because you're providing a value accretive activity. If you do something like stake YUTY, deposit it on Euler, put it in a DEX, et cetera, you are doing a network accretive activity, and therefore you are eligible for marketing incentives. And that marketing incentive rate today is, we paid out last week about 12%, but varies between 12 and 15%. And so to boil all that down, what is it? Unity is a dollar denominated product. It tries to trade at around $1, and it is entitled to network fees that XE generates. Is there
I think Breevy froze.
Breevy went to go buy some Unity after the explanation.
Yeah.
Was my assumption of what
We heard
happened.
Question on my end.
Breevy, you're back, I think. We at least can see you a little bit. He's been a little laggy today, he said, in terms of his internet connection.
I'm kind of back. I think I'm back. Just wondering from a user perspective, what does that look like? Let's say I wanted to start getting involved with Unity right now.
So the easiest ways to do it are, as David was saying, there are things currently live on chain where you can participate. I believe, let's talk AVAX ecosystem, Pharaoh, Balancer, Euler. Right. So you can find these pools, you can find the product. The XE website is live. I will always tell everybody, as I have to, being the gray-haired guy here, if you're using any DeFi protocol, there is risk involved. So be smart about what you're doing. But these are pretty vanilla and transparent setups from a crypto perspective. Do you want to contribute to a balancer pool? Do you want to be using Euler for this? Do you want to be using Pharaoh and providing liquidity? And then David mentioned XE has launched, it is live. You can go to the XE website and just stake the tokens and receive the yield. It's a very sort of simple form factor in that one of okay, you've got it, you put the thing there and you move on with your life. David, do you want to add anything?
No. I mean, like Sean said, we've tried to distill this down and make it as easy as possible. Where you come to our website, there's a nice little nav that you go to launch the app. On the left-hand side, it says Get Unity. That's your first step. The default currency there is USDC. There are other pairs available, but that's the one that we just have as kind of the primary swap. So once you swap stables for Unity, you go to the rewards page and you can deposit it in the yield vault. And within 3 clicks or so, your money's working smarter for you. And so that's what we've tried. That's V1. We've got additional products, additional partnership offerings. There's more utility on other protocols, as Austin mentioned, but that's probably the easiest way for the vast majority of people listening. All powered by AVAX, we should mention.
Yeah, appreciate you for mentioning that. I do have to ask. So I put some money into the protocol. Where does that go? What applications does that go to under the hood?
So the swap, when you hit the Get Unity page on our website, the swap is currently redirected to the Pharaoh pool. So if you just wanted to go and do it, yourself on the venue, you could just go to Pharaoh's website. But that's the transaction that's occurring under the hood. And then when you get UTY, or when you deposit and deploy in the yield vault. That is just a standard ERC 4626 contract where you get basically a share allocation depending on how much you've deposited, and then we deposit marketing incentives into that, and that's how your basically your position grows in value over time. And so that's it really. Is there's a DEX swap, and then there's a vault where we deposit marketing incentives for participating in the protocol.
David, is your team thinking about potentially having a failsafe for like a OR function if the liquidity in the LP pools on Faro or other DEXs are too shallow for someone that wants to mint size, essentially, like a direct mint functionality?
Yeah. So I'll give you the brief answer, and then Austin can talk more about circuit breakers and the way we think about it holistically. But the short answer is yes. For large institutions, large counterparties, we have an onboarding flow. So if people want to deposit $5 million, whatever it is, they can reach out to us directly. There's a little KYB process that we go through, and then those people can mint directly. But for the vast majority of participants, just hitting the DEX pools tends to service their needs.
Gotcha. And so with that, if someone wants to do the reverse flow, the main fees they're paying are just whatever the like LP fee is on that pool directly in terms of swap fees.
Yeah, that's right, Austin.
Yeah, no, that's totally correct. Like for, call it local amounts, you want this to work as seamlessly as possible. So congrats, you're paying an LP like fee. If you've got Unity or like the staked version, there are LP pools and you can get in or out of those. Behind that, of course, if you're familiar with the crypto ecosystem, there are probably larger, like call it sharks to whale sized people, market making firms, everybody arbitraging things. It actually works very much like a traditional market. When you do this with equities, exactly as was being said earlier, you click a button and it all kind of magically happens in the background. But the reality is somewhere Citadel is taking a fee to do a trade every single time. And here, the nice part is the fees are pretty transparent for you.
Can we talk a little bit about why Avalanche specifically? Like, why is Avalanche like a good place to build this?
Sean, do you or Matt wants to take it? There we go.
I'll start and then
go ahead, Matt. You tell us.
Personally, I think Avalanche has kind of transformed over time, especially now with like Octane and Etna. C-chain gas fees have been lowered to just being damn near zero. And I've been a part of the Avalanche ecosystem for 4 years. And originally fees were very low compared to Ethereum back in the day, because that was when Ethereum had like the NFT craze happening in 2021. And so when Avalanche Rush first was a thing in the summer of 2021, I think our gas fees were roughly like 20 to 40 cents a transaction compared to Ethereum fees, which were sometimes hundreds of dollars a transaction. I paid, I think, $350 to bridge to Harmony One. And that was my most expensive transaction back in the day. And so with that, over time, Avalanche has become cheaper and cheaper in terms of C-chain fees. And the C-chain has kind of become that composable liquidity layer for the rest of the Avalanche ecosystem in terms of Avalanche L1s. And so I think from a tech perspective, Avalanche just makes a lot of sense in terms of being able to have almost every use case catered towards that a builder might need. And so in this case, Unity is like a DeFi builder. And so they're on the C-chain. They want that liquidity layer, the composability that C-chain provides, permissionless smart contracts in terms of like developers being able to deploy, as well as users being able to like use the C-chain. When in reality, Avalanche can also support, fully permissioned institutional use cases via Avalanche L1s. And so I personally think Avalanche has that long-term staying power because we can build towards so many different use cases because of the low-level architecture and high degree of customizability that Avalanche really provides. And I think hopefully David and Sean would echo the same in terms of like, Avalanche building longer term, and that's why they chose to build here, and really the tech benefits that Avalanche provides. So
Everything that Matt said is absolutely correct. I think that's all true, by the way. I think that the composability and the performance and commitment to great tech was certainly a minimum requirement, and Avalanche is kind of a leader in that. I would say that if you look at our situation in particular, I made this comment at the summit, and I believe it's true, and that's that there's been a lot of people experimenting with a lot of ecosystems over the last 6-7 years, and finding what works and what doesn't. And what I see happening with Avalanche is a lot of projects that have learned either the hard way or through some other event that they want to come to a place like Avalanche because they've got the experience to know what Avalanche is bringing to bear in terms of the tech and the community. I made the comment that it's the people with scars in the space are all coming to build on Avalanche now because they've kind of learned. So I think that's certainly one thing. The other thing is, given the space that we're in, we need a partner. Like, this isn't, we're going to launch the, Hawk coin and it's going to be great and, let her rip when moon. This is like a strategic relationship. And Matt and his team and the Blizzard team, and they've been super helpful in making introductions, helping us expand relationships in the community, talk with us about the Unity product and other products that may end up coming as a fast follow. So we have a partner, like an adult set of individuals who know how to have these conversations when the product is more sophisticated and the team is more sophisticated, and that's rare for chains too. So again, kudos to the Avalanche side on that front as well.
I would also scale in to say, as you think about building products for the future and expansion into areas, on a forward basis to grow the ecosystem. Matt, you said this, the fact that you could have permissioned subnets and like instances that would work for certain kinds of institutions who don't want all their business either being in public or being interacted with by everybody can be very powerful here as well. If we're thinking about bringing the next few generations of people on chain, that means it's not just the current users that we have. You need to think a little bit more expansively, and Avalanche is a platform where a lot of things are possible that currently are not possible on a thing like ETH mainnet. And they serve two different audiences and are like complementary to each other. It's not one or the other kills, the opposite, but rather if you're thinking about future proofing, you want that kind of capability.
The only other thing that I would add is you need not only great technology, great team, great partner, but you also need a capital markets. Going somewhere with a new L2 just wasn't feasible for us in our selection criteria because they didn't have the capital markets infrastructure or the relationships or the integrations that we needed to build this product. And so Avalanche certainly, in our opinion, stands above far and away. We could probably do a whole nother podcast just on the current market structure of AVAX and the interesting, things that happen around the trading of that asset. But that was key to us in our evaluation, and having a great team at the foundation and at Ava Labs who deeply understand this, that matters a lot.
So we talk a lot about like how this can affect like the overall user base, right? For one thing, I'm very excited about. I love talking about things that kind of extract away these complex layers that Web3 has decided to build over things. I feel like it's very hard for people to just use an application or just to onboard and just get started. So whenever we talk about products such as Unity, where it kind of is taking the more kind of difficult layer, like you guys are taking away like the difficulties of the AVAX long, shorts, perps, all that, having to do that whole delta neutral strategy yourself, and extracting that away and allowing for someone like myself who knows nothing about those whatsoever to be able to come in and just kind of deposit some and then hopefully start to earn some yield. But I think that there is another kind of effect that will happen here kind of at the DeFi protocol level, like the DeFi protocols that are actually on Avalanche. Matt, could you kind of speak towards that? Like, how will this kind of impact the DeFi protocol specifically on Avalanche?
Yeah, so Unity and kind of the staked version that can get the marketing incentives, it allows for another yield-bearing asset that can be used composably across our DeFi ecosystem. And with that, I think it's another place that both retail and institutions can park their capital. And I guess not even just those two. I think the XE team has done a great job also at even appealing to like foundation treasuries, even outside the Avalanche ecosystem, because it's another treasury management tool in terms of getting yield on their treasuries. And so, with that, I think within our ecosystem, it'll just be an asset that grows over time as people want delta neutral yield on an asset that is highly composable and useful within our ecosystem. And I know Austin mentioned like Faro, Euler, LFJ, a variety of other venues that it's already on. And I think, as a stable asset kind of grows in time, the use cases grow as well. And so that's kind of why I'm excited for this product, is I think eventually it could rival, other kind of delta neutral stable products similar to Athena within the Avalanche ecosystem and really expand in terms of use cases. And I think there's a whole new side of the use case spectrum that we haven't really even explored yet. RE is a reinsurance protocol, for instance, and I think the XE team could work with them in terms of backing those reinsurance claims, as well as like investing some of the premiums basically into their from their junior tranche into XE in terms of yield generation on that junior tranche. And so I think the use cases are kind of endless in nature, and as an asset grows, the use cases expand as well. So.
And coming back to the subnet architecture, I mean, the way we talk about it internally is that every single subnet is just another point of distribution for us, for the treasury, for the end users that the subnet ultimately serves. Like this is just, as Matt put it, a composable building block that anybody who wants to get better rates than T-bills can pile into.
So I know that you folks actually like partnered with Euler as well. Can you talk a little bit about that partnership and kind of how you folks are going to approach partnerships in the future?
Yeah, I can start. So it takes a village. So it wasn't just Euler, right? So K3 is the first capital curator. So they set up the vault strategies, which really means that they are the ones who control the dials on the caps, the leverage. They do the due diligence across the oracles and the other inputs that make these markets real, right? And so hats off to them. They've been a phenomenal partner. The Euler team was obviously great. We're working with Redstone as an Oracle partner. We're working with just a number of firms. So there's a lot of effort that went into just being able to have the assets, available in that marketplace. Obviously, thanks, Matt, to you and your team for helping us, pull it all together as well. And so what does it mean? There is now a money market for UTY and YUTY. And so if you are looking for access to leverage, if you're looking for ability to hedge your position, if you want to, get more useful collateral without selling your existing position, all of that is now possible through the Euler market. And so if you wanted to post AVAX as an example, and then borrow UTY, and then use that as a way to get exposure to this product, like that is now possible. And so it opens up a lot of interesting use cases where if you don't want to sell your holdings, but you still want to get in, you now have ways and access to do that. Sean, Austin, would you guys add anything else to the exciting launch of Euler?
I mean, I think what I would say actually legs onto something Matt was just saying. And I guess this may be an open invitation to a lot of people listening to this, which is our goal is to work with first-class partners and be composable across the entire ecosystem, right? One of the beautiful things about crypto that is a complete refutation of walled gardens in traditional finance is the money Legos phenomenon. So the ability to use, now an asset that can generate marketing rewards and compose into various kinds of pools to work with partners to facilitate all sorts of use cases is exactly what we're going for here. And the interesting part of most of the really successful protocols and projects over time is you do find these partnerships with all sorts of people across the ecosystem. And so I would just say to everybody, this is not intended to be like some sort of closely held cabal of like private actors. Like, we do want to be a genuine part of the Avalanche ecosystem and the greater crypto ecosystem. So, some of the best partnerships come about just because people start talking to each other. And I think that is an important angle that everybody in this space should appreciate. It is very different from some past elements of the financial system.
One thing I wanted to mention is I think the launch of Euler also, provides almost an inflection point in X's history, because I think once you get that first money market listed for an asset, especially a yield-bearing asset that can be profitably looped within that money market, it really allows for just like a further proliferation of the asset rather than just LPing it on a stereotypical DEX. And so once that looping strategy for a yield-bearing asset can take place, that's when people can kind of, juice the yields on the underlying. And so that 10 to 15% yield can turn into 20 to 25% yield rather easily once you take a little bit of leverage. And of course, always be careful when doing looping strategies, especially for a newer asset in which might lose peg. I think that's kind of the main thing. It's funny. DEUSD on Avalanche had a little bit of liquidations because there was a large trade on ETH mainnet in which the Oracle feed, right? I think it was like 96 cents or 98 cents for that stable asset. And so with that, there were a lot of, let's just say, overly levered apes that got liquidated. And so although taking leverage really allows you to juice your yields, I think you have to do it in a manageable way because most of these assets are relatively new in nature.
This brings us all the way around to the previous discussion of like, how do you think about portfolios? Is like some generic financial advice for everybody that I think everybody is allowed to give is, when you take positions, try to understand the risk and the volatility. Like, one thing that was very good discipline, back when I was on a trading desk, is before we're taking a position, understand why we're taking it and what would confirm it works and what would be evidence that we were wrong. Right. So basically, like, what's your upside? What's your downside that you'll tolerate? And at what point do you stop out? Like, think about these things beforehand. And part of that is position sizing. Like, leverage is a tool, and indiscriminate use of leverage will almost always get you into trouble in the long run. But careful use of leverage can amplify returns. And again, Matt, to your point, all of these tools are open and available to people. I would urge them to understand them, think about them, know what's out there, but also use them judiciously. If you take a giant position and then get liquidated, we're going to be talking about it on a live stream and you're not going to be happy about it.
I really appreciate you saying. I really appreciate you saying it, Austin. I'm sorry, I interrupted. What were you saying?
No, I was going to say, see also James Wynn, where that happened publicly in size recently. Like, again, I sort of sit in this weird place of like, I'm pro experimentation. I'm pro trying new things. I'm pro messing around with stuff, but also know what your position sizes are and don't risk more than you can lose.
Yeah, I think crypto and blockchain more holistically has a way of humbling main characters and people that are kind of boasting about certain things that, when in reality, if they were a little bit more humble, people would not, liquidation hunt or directly try and like attack them. And James Wynn is a good example of a very new main character the past month that has since been chopped to pieces and liquidated multiple times. So.
I'm also taking all of this extremely hard because I am the victim of a lot of liquidations in my past. So I definitely appreciate a product like yours as well. Actually, are there any plans for any sort of like product expansion or extra strategy layers?
The short answer is yes. The longer answer is that we're working really closely with a lot of partners in the ecosystem to make sure that UTY and YUTY are as accessible as possible, integrated into as many distribution channels. There's a handful of additional DeFi integrations that are upcoming, so be on the lookout for that. We've got a points program that we're going to be announcing here for our ecosystem and the participants, so be on the lookout for that. So we've got a lot of great stuff just around the assets that are already in market today. With that said, we've got a great roadmap towards additional new derivatives, new instruments, and we're pretty excited to roll those out. And again, just stay tuned. We're not quite ready to unveil the next wave of product innovation, but Sean, if you want to.
No, I agree with all that. I'm just going to add one additional thought onto the final comment you made, David, which is we don't have a not invented here mentality. Again, given our experience in various companies in various industries. So David's 100% correct that we're going to be rolling out new products. I expect what you'll also see is we're going to do several things in partnership with players in the space. So it's going to be, let's build structured products with someone. And then, you've got an immediate relationship, you've got immediate distribution, you've got, a way to start to increase the gravitational pull at Avalanche to bring in new capital versus just operating within the tub, right? Because that's never the greatest for a vibrant economy. So to David's point, stay tuned, but we're pretty excited about what we have on our roadmap beyond just the products, but also how we're going to make them and the partnerships that go along with them.
And definitely excited to see when all those different partnerships on the roadmaps start to come into fruition over the course of the next, however long, few years, however long it takes. I guess just to kind of start winding things down, I'm going to ask a round table kind of question. If you had to leave our listeners with one takeaway about Unity and what it's unlocking for DeFi and Avalanche, DeFi in general, actually, what would that be? I'm going to pick on Matt first, and then I'll pick on the XE team.
Yeah, so I guess what it's unlocking is the main part of this question, just so I understand.
I think it was, why is Unity so great?
That's exactly what I'm saying,
Yes,
Sean.
why is Unity amazing?
I thought that's how it should be worded instead. No, I'm just joking. To me, I think we unfortunately we went through a cycle last cycle where everything was ponzified and not sustainable in nature. And this cycle, we're transitioning to sustainability, things that don't need, free tokens to generate yield, that sort of thing. And so with that, I think Unity is going to be kind of a staple or backbone within our ecosystem in terms of when people don't want as much market risk anymore, they can go to this asset and they can get sustainable long-term yield, regardless if, AVAX is being used as a token incentive or if the XE team is giving out points, something like that. I think the composability of blockchain is kind of what makes it so beautiful. And with that, some people never want to leave the ecosystem. They don't want to go to TradFi and buy T-bills in their brokerage account. They would rather just, have an asset like Unity that they can go into and have this staked version being able to achieve yield. And so in my opinion, I think it's another building block that's just going to be around our ecosystem for a very long period of time and that's sustainable in nature. I'm much more excited about this cycle. I do like a good unsustainable yield source on occasion. But I think things that are more sustainable are those that will be around and will help actually build the ecosystem out. So.
All right, my folks over at XE, did you have anything you want to add to that, or anything you want to piggyback off of?
I'll start, and then we can go to David and Sean. So we do this in the reverse order of the intros here. But I would say for me, I'm very excited about two things in particular for this. One is exactly what I said before, which is unlocking this span of things that people can do in composable fashion. I really do think the money Legos component of crypto is one of the core competitive advantages for people. If you look at the cypherpunk ethos, they talk a lot about decentralization, but I come from TradFi that is nothing but walled gardens with some of the highest walls in the world. And so for me, it's actually the open source and open access nature of things that was most attractive here. So being able to build things and then look forward to unexpected partnerships or other people building on top of us is the kind of stuff that I'm really looking forward to. My prediction is 1 year, 2 year, 5 years forward, there will be things that none of the 5 of us even thought were possible or happening with XSY.
I really, really love that you said that, Austin. I really, really do. Because I think the open source nature of crypto in general is absolutely beautiful. Like you being able to kind of start this foundation and people just starting to build on top of that foundation as well. Cool. I'll David and Sean, if you don't have anything else to kind of piggyback off of, I'll oh no, you got it? You good?
Here's my bold prediction, Breezy. By 2028, more Fortune 500 companies will hold programmable dollars on their balance sheet than money market funds.
Yeah, put that on Polymarkets.
Better bookmark that one. The next time we do it, David's not on the call. You know that prediction didn't go right. The one thing I would say again, as the old school philosopher here, is that the quick anecdote. I think the headline for it is that everyone who's on this live stream and everybody who's participating in crypto broadly, what you do today and the way you behave with your counterparts today is going to be something that is going to come back either in positive ways or less positive ways to you in the future. Full stop. I say that for our space particularly because there's always people who are kind of cutting corners and doing things just to try to make a quick buck. And I would say that one of the great sources of pride I have, and I think David can, I think I could speak for David too, and Austin, is that, we've earned our reputations by, I think, doing things right, treating people the right way, behaving the right way, being transparent, being professional. Sometimes it's cost us returns, for sure. I mean, you could always roll the dice and skirt that line, but our mentality is do right by people, do right by the people that we work with, do right by our partners. And I'll tell you that when I met Emin at the summit, he came to me and he reminded me that 6 years ago, he had called me when I was at Algorand and it was 11 o'clock at night. And he and I didn't know him and we hadn't really worked together, but helped together solved a problem. I had forgotten about that. When I met with Emin, it was the first thing he brought up. And so the way I think about it is, the way you behave, and if you take the right attitude with people, with the right ecosystem and the right partners, it's a long tail. We're working on the long tail of finance at XSY. There's a long tail to relationship benefits as well. And I think we're capturing that. And I intend to make sure that continues to happen. So that's my, more Harvard Business School management comment, do right by people and it'll all come back to you in the end.
I appreciate you for actually telling that story because it's a great spotlight of the collaborative nature of Web3 in general. And that's like one of the things I myself really love about building in this space is just how collaborative it is. Really, really appreciate you folks for coming on today. Obviously, like the people out there, I'm sure you folks learned a lot. I myself learned a lot as well. David, Sean, Austin, Matt, man, thank you guys so much. You guys have been absolutely like a wealth of information and really, really excited for what you built and kind of abstracting away this very difficult layer and kind of making things easier for the everyday user, kind of like me. So I really appreciate you folks. And for everyone out there, I'm going to do this. Bam! Right there. See, Adam, make sure you follow at XSY.fi, XSY_fi. If you want to stay up to date with everything being built by the team, you want to make sure that you stay up to date with them. As you can hear from this program, they have a very long-term mindset, so you want to stay long-term with them. And I'm going to give you folks a little bit of a pro tip as well. Bell notifications, my friends. Bell notifications that will make sure that anything that they post, you get a notification for, so you don't miss anything that's coming from this amazing team. Again, David, Sean, Matt, Austin, thank you folks so much for popping on today. To the audience, so much for watching the stream. For everyone out there, we'll get this up on Spotify if you tuned in too late. So don't worry, we'll get this up on Spotify so you can check it out there. And then last but not least, I guess I'll just end this thing by simply saying peace and